after an impressive start, the S&P 500 now down for the year. But the chief technical market analyst over at Miller Tabak Company says we may be near the bottom, at least for the short term. Phil Roth joins us now to explain. Phil, good to have you here on Street Smart. Good afternoon. So let's, you say we're maybe in a bottoming process. What tells you that?
Well, right now we're oversold, and we have the opportunity for a bottoming process. We've seen a number of days where the market's rallied on light volume, following days with heavy volume on the downside.
Right.
We need to see a day with increasing volume on the upside to confirm a little base. We have yet to do that.
All right, and I know there's a couple charts that you brought in for us, and I want to bring them up for our viewers so we can kind of talk around them. And I think the first one is actually the S&P 500. I think it's a 200-day moving average.
Well, we'll see is the S&P...
or 30-day, forgive me.
Okay, this chart points out the oversold condition of the market. The S&P is about 8% below its 30-day moving average.
Right.
I consider that oversold. Oversold is the first element in a possible turnaround. It's just the first. You need other things.
You need other things, such as?
Increasing volume on the upside.
Okay, you need that.
Today was a day where we had the opportunity for that. It fizzled, so we didn't get it.
What does a day like today tell you? When we had some strong gains earlier on in the session, up more of, I think, 135 on the Dow, and yet we pulled back from that.
It tells me that the sellers backed away in the morning. You really didn't have a big buying interest. The sellers got discouraged, and the buyers got discouraged, and the market drifted back off again. If we're going to attract some investment buying, it will show up with some decent momentum on the upside. We haven't seen that yet.
All right, we've also got another chart. I think now we're going to see actually the 200-day moving average. And so 200-day, we have, our Adam Johnson's been talking about it a lot, how we moved below that 200-day moving average, very key in terms of the S&P 500. So that's what we're seeing with this chart.
Right. The 200-day moving average is beginning to flatten out, and the index is below it. This is a pretty critical area, because if we're going to stage a recovery, it's unlikely going to do so if the moving average rolls over, because a good rule of thumb is if the index is above a rising 200-day moving average, you have a strong trend. If the index is below a falling 200-day moving average, you've got a weakening trend. And that moving average is about to turn down. We need strength right away to prevent that.
All right. If we don't, then that will say to you that the longer-term trend here is a downward one?
And not only that, it means that the action over the last few weeks is not a little bottom. It's a consolidation on the downside.
All right. There's another chart that I want to talk about, too. And this is, I think, looking at oversold stocks, correct?
Yeah, we have a picture of the percentage of stocks above and below their 200-day moving average. One of my trading rules is when that percentage falls below 20% and then rises back above 20%, that's kind of a buy signal. That's what happened in the spring of '09. And the opposite is a sell signal. When the market goes above 80% and then falls back below it, and right now we've done that. This index is in a sell mode, and it's not oversold. So this indicator is basically saying that the medium-term outlook is questionable at best.
So kind of at a critical juncture based on the charts that you're looking at this point in terms of the S&P?
I think it's critical for a short-term rally. It's not critical for the longer term. The longer term is weak. And what we're looking for is the opportunity for a counter-trend rally.
Right, right. If we get a rally at this point, I mean, would it be a substantial rally in your view?
No, I think for the majority of stocks, it's likely to be a top-broadening rally. Some indexes make a new high in the summer, some do not. A minority of stocks make a new high.
All right, and you said the longer term, the secular trend is a bearish one, correct?
Yes, the market has been in a range now for 10 years where between the 00 high and the 02, 03 lows, and we're more or less in the middle of that range. I don't think we're going to come out of that range for another 5 or 10 years. So what we're trying to do...
5 or 10 years.
Right. This secular corrections last upwards of 20 years, 15 to 20 years.
All right, got it. All right, we're going to leave it on that note. Hey, Phil, thank you so much. Appreciate it. Phil Roth, everybody, from Miller Tabak. Coming up.